Welcome back to another episode of the Lofty Lenders Homebuyer Education, where we explore tips, tricks, and stories that can help you plan for your next home purchase. Whether you're a first-time buyer, a move-up buyer, or investor just looking to learn, we hope you gain a little bit of knowledge today. Today, we are diving into, Charlie, why did my mortgage payment just go up?
It's always a hot topic. It doesn't matter how long you've owned your house, right? Actually, before we even go, have you ever had yours go up incorrectly?
No, but I did have it go down incorrectly.
Okay. Well, then I had the up and you had the down. I think you got the raw end of that deal later.
Absolutely. Yes. We'll get into that today.
But no, why is it, Kyle? I don't understand.
Well, most people say, Charlie, I didn't refinance. I didn't miss a payment. So why in the world is my mortgage payment going up? And it just went up $120 or $150 or more. And, that's definitely a phone call we often get in October, November, December, January, when that officially hits. And oftentimes it's because your escrow has increased. Right? A lot of times you're going to see your taxes and insurance have gone up, and each mortgage company will do it at slightly different timing, but it's normally around October that they're going to do an escrow analysis. They're going to review your loan and make sure that the money they've paid out on your behalf for your taxes and insurance has gotten applied correctly, and that you don't have any shortages or overages. In my case, overages apparently when your taxes are paid by your mortgage company. So they look at that, they say, okay, Charlie owed $1,000 twice a year and we paid $1,000, but you were only giving us $900 twice a year. So we were $200 short for the year in total. So now we need to go back and collect that $200 from you. And then we have to assume that next year the taxes are also going to be that amount. So we'll have to collect a little bit more as well to make sure we've got enough in there for next year's tax increase as well. So they can't necessarily predict what the taxes will increase to. Nobody can, but they at least can say, we want to make sure that your escrow is balanced every single year.
Yeah. I mean, really, they're just trying to make sure that the fluctuation isn't large. And I think we really have the hardest time when it does get larger. And everybody's definition of large is a little different. But, if you move $10, $20, $30 because your taxes and insurance change, people really kind of just go with the flow, it seems like, and don't question it. But then if you have a bigger year, and you're going to be a great example. When you build, you've got really awesome taxes because they haven't really caught up to you yet. So it takes a while. That first year of having a mortgage payment when you build that house, you really don't have any taxes because the building wasn't there since, again, we're talking Iowa. In Iowa, you pay for the year prior when it comes for March and September. So it's always a little delayed.
Right. So, and we also we talk about taxes, but over the last couple of years, we've really seen insurance jump up a lot as well. Insurance premiums have skyrocketed. I know I talk to people all the time from other states that say, well, your guys' taxes aren't too bad compared to where I'm from. Sure, but have you checked out insurance? Most of the places around the country, when your taxes are really high, your insurance is pretty low, and vice versa. If Florida, you look at their insurance, I don't know their property taxes, but I think they're a little lower in percentages. Obviously, the value of those homes is quite a bit higher than what we see here, but they're just not paying as much in tax and insurance combined as what we are seeing here in the Iowa, Nebraska area.
Yeah, and it has been a lot. It's tricky to take when you have big storms come through. We know how many people that have gotten 2 roofs in a very short period of time. It's not like you're having your roof on for 20 years and then a storm hits. A lot of people had, 2-3 years apart had 2 new roofs, maybe faster. And so those costs are going up and it just makes the insurance go up. It is hard to take, but we still want to make sure that you're having good insurance. Like, we don't want to see somebody keep the same premium and have a $5,000 or $10,000 deductible if they can't afford that. So having that right insurance coverage and deductible and all the right details, again, you might have that cost go up a lot more. So therefore, monthly your mortgage is going to step it up to match it. So again, hard to take, but that's where the conversation comes into play so we can try and make sure what's appropriate.
Yeah, and one thing I think people often forget about as well, because I don't know how well it is explained to them, is that escrow accounts, not only are they paying the taxes and insurance, but they're also setting up a buffer account as well. So as part of your escrow account, there are usually a couple of months of taxes and insurance also set on top of your annual premiums to the side. And so, somebody says, I don't want to escrow because I don't want to have extra money sitting aside there. It is true. There is a little bit of money sitting aside, and it's in anticipation of your taxes and insurance increasing. But at the same time, I mean, the money's more than likely going to get used. And that's why it's all a big mathematical calculation. They put everything in and they say, we paid this amount. You were due this amount. In order for us to have the 2 months reserves, we have to have this amount. We add all that stuff together. And that's how we get those letters towards the end of the year that say you were short $400 for the year in taxes. And now you need to either pay it one lump sum, or you can amortize that over the next 12 months. And we will include that in your monthly payment. And which is why we see people have their payment increase. And they get that letter, they don't even read it. And they say, well, Kyle, why did my payment go up? Well, it's because you didn't make that $400 payment you could have made just a month ago, which maybe you didn't have the 400 and that's okay. But now you're going to pay for it monthly.
Yeah. And that, I mean, really just open your mail, because a lot of this stuff, you know, when taxes come out, they give you the chance to dispute taxes before they're finalized. When your escrow analysis comes out, they give you the chance to option A, option B, call with questions. And sometimes it is a little bit easier to find $400 so that payment doesn't move. Other times it's just nice comfort level to ask questions early, so that way you do know what that next auto draft is, because most people set it up for automatic drafting. Then you're not surprised when that payment is higher than what you're used to. So definitely open your mail, ask questions, don't wait.
Yeah, and there's a good analogy here, which is you can think of your escrow account like a household grocery budget that you set on autopilot, right? So you budgeted maybe $400 a month for groceries based on last year's prices. You know, I personally go through and I budget every month. I mean, I know exactly where all my money has been going or shouldn't be going, whatever. But then, you know, the prices at the store in this analogy, they've gone up. And so in December, you realize, whoa, I'm short. I didn't have enough money to pay the $400 every month that I had planned to, because, you know, grocery bills have gone up. I mean, we've seen this at the stores today. It's not that the bank is overcharging you or your budget is wrong. It's just that the grocery expenses have gone up. So now the cost of those food items are just more. And so you have to reset your budget to make sure that you have enough money in there now, but you also want to make sure that you've got enough money in there planned and prepared for next year, knowing that inflation is here and we've seen those numbers increase. So might as well plan for groceries to be more expensive next year, because that's what's going to happen.
Yeah. And again, always a great idea. I love that one, Kyle. The fact that it is this today, it's not the greatest way to budget. You need to know that, but always plan on there being a little extra. I mean, like you said with groceries, what if you want to buy the T-bone? Okay, well, you need to have that little extra cushion there for a special occasion or an oops. And I think that's one thing when we do get people that say, hey, I don't want to escrow because of that buffer you talked about. That's actually a great safety net. If you don't escrow, then you just have that big surprise all at once. And now you've got to try and find a way to manage that. So everything in the lending system is really designed to try and take as many of the stressors and the big surprises out. So we're talking about, you know, changing $100, $120 a month if you had that big of a swing. It's a lot bigger if you have that big insurance bill come in for a few $1,000 that was twice as much before. So having that buffer in there and having that escrow analysis once a year really is helping not get any further behind than you have to and make that pain be hopefully small. But again, that's one of those things. There's always other ways to do it. And I think you and I have actually seen some very nice shortcuts, which we can cover a little later, just to take and bridge that gap. Like anything else, you have an unexpected expense. That escrow analysis is one of those things that we can always talk about.
Yeah. So you say having a little bit of a shortcoming. Me personally, I had a large shortage. You know, I mentioned this at the top of the show, but a few years ago, I had a mortgage company that was servicing my loan, and they sent me an escrow analysis that said, Kyle, your taxes have gone down, so your mortgage payment is going to be lower. And being in the mortgage business, I should definitely have read that a little closer, but I didn't, because I thought, my taxes went down. This is great. My monthly payment is going down. This rarely ever happens. I hardly ever see this happen, right? Well, turns out the person that was doing my analysis,
there's a reason for that.
They probably are doing a different job now, I would assume, because they let me know that my taxes were only due once a year instead of twice a year. So instead of collecting for 2 installments, they were collecting for 1 installment and only collecting for half of the taxes due. So the following year, when I got my next escrow analysis, I found out that I owed $4,000 to recoup what I missed out on paying, plus make sure that I get caught back up. So Thankfully, I had some money set aside. It was not to pay my property taxes. However, I knew that I was in the wrong and probably should have called them on it initially. So it's really important when you see that your payment's going down that you also question it and say, did my taxes really go down that much to be able to save that much every month? Because it was a really nice surprise that was actually, it was kind of like an Indian giver. They gave me a present and then they took it back and they said they wanted more.
Yeah. Yeah. And I think you hit the nail on the head. Like, it's anything that's outside of a small change. Really, you need to just throw the flag up and say, hey, time out. Something's not right. And if it is right, did we have an occasion for that? To me, you may have gotten a military or a senior discount on your taxes that wasn't there before. That could take and make a positive change. But I'm right there with you. I had the exact opposite, but it was one of my favorite things ever because it wasn't one of our customers. It happened to me. And so I'm like, okay, great. I can make this phone call, but mine doubled. And I knew my taxes had not doubled. And so I called in and like, well, sir, let us explain to you how this works. I'm like, okay, great. Tell me how this works. And we kept going through it. I'm like, it's incorrect. Can you pull up the copy of the statement from the county that you get showing my taxes? And they did, but they just kept digging in. So sometimes it's going to take a couple phone calls, but it's a human error. Like yours, they data entered once a year versus twice a year. Mine, they put the new taxes under a water tax category and left the old property tax alone. So wasn't quite double, but it basically doubled. But it took 3 phone calls to convince them, and then they had to call the county because they said, well, you have a water tax. I'm like, we don't have a water tax. So anything that's outside of small changes, you just want to make sure you ask the questions and use this as a resource. We don't have to have done your loan in order to help you review what that escrow analysis looks like, or even last year's. You just kind of went with it and got frustrated. We can go through that. That way, when it comes this year, it's less stressful. And if there is an error, you know what questions to ask, because that's half the battle. Understand what it is, ask the right questions, and then do the right follow-up. You're going to deal with humans, and we're all bound to make an error here and there. But if you know what you're talking about and can be more confident, then it's that much easier to try and tackle.
Well, and I think one of the things that you and I focus on a lot is our budget, right? In the budget of the consumer that we're working with. And I often worry that the budget, we're putting somebody potentially into a loan that is at the very max end of their budget, and property taxes and insurance are going to rise. And we hope that your income is going to rise. We hope you're going to get a raise. We hope everything's going to work out perfectly. But with the number of loans that we do, there are definitely people that they don't get that, or maybe they lose their job or whatever. So putting you at the very max end of your budget to start is really scary. And this is the reason that we have these phone conversations up front about, we don't want to max you out. We don't want to see you go to the very tippy top, because what if that one, thing breaks? Or what if your taxes go up $800 a year and now suddenly you've got to make an extra $75 monthly payment on your mortgage that you were not prepared for. All these things can really have a big impact on your monthly payment, and people are all worried about the interest rates. They're not really talking about the rising costs of taxes and insurance, because those are just things that we're so used to seeing. But ultimately, they kind of come into consideration here as well.
Yeah. And you brought that perfect full circle for the same thing we basically say every time. Most people are going to focus on one little piece, and then all these other pieces kind of fall to the wayside. We just don't want to see that. We want to have a good, well-rounded, just initial loan. If you're looking at a refi, if you're just reviewing your budget because of the escrow analysis, whatever it is, we're not going to focus on that one thing to make it perfect. We want all the little pieces that go with it to play nice. And that way you're getting the best overall result. And ideally, when you do have those stressors pop up, hopefully you're ready for them. And if not, you at least know who to call and say, hey, time out. I need some assistance. This is not what we planned on. And life does do that. But I love the fact that you said, you want to have the reserves, have the emergency account, because you just don't know whether it's the car, the property taxes, the water heater, the kids. There's always something, and it doesn't get cheaper.
Yep. So let's get into the 3 actionable takeaways. So number 1, this again, always my favorite part of our show. Number 1, read your escrow analysis line by line. Don't just look at the new payment amount, but figure out what changed. Was it the taxes, the insurance, something else? Maybe your taxes got added into the water tax bill for some reason. Figure it out, understand it, so that way you're in better shape. Number 2, if you're confused, you can call your servicer. call them up and ask them to explain to you what changed and why is your payment going up. Or maybe you got an overage and you're not understanding why you have an overage because you thought you saw that your tax bill went up and you want to understand why your payment's going down. So if you have questions, you can always call your servicer. You can always call us. Charlie and I are well versed at looking at these. I will be honest, there's not a lot we can do, being that we are not the servicer of your loan. However, if you need to talk through it and understand it, it's something that we absolutely we'd like to do. We enjoy that touch point and talking with you about that. And finally, work with your insurance agent. If you work with an agent who's maybe an independent broker and they work with different insurance companies, or you just have a couple of different insurance agents you work with, see if there's any potential better options out there for you if your insurance has gone up. Unfortunately, taxes, you don't really get to choose who you pay your taxes to. Your house is where it's at, and you pay the taxes based on the city and county limits. But with insurance, you do have a little bit of flexibility. You can absolutely talk to a different insurance agent. You can talk to your own insurance agent and say, hey, are there any other products out there that I might qualify for that would fit my situation and maybe help me save a few bucks? Or, sometimes when you're in a specific type of property, maybe you've been in this house and it was built 19 years ago. And so because it was under 20 years, you're getting this great rate. And then once it goes over 20, for whatever reason, that company doesn't like homes over 20 years old. And so suddenly now you need to look at a different company who actually likes properties that are over 20 years old. Little things like that you're not even aware of could totally exist. And so that's why it's really important to talk to your insurance agent and see if there's anything out there that could potentially help you save some money, either on the deductible, on the premium. Maybe you need to bundle your auto and a home together, and maybe that all works out better. I don't know.
It's the review, just like you said. You got to look at it, make sure you tackle it. That way you do know what the options are. Just don't ignore it.
So to wrap up, escrow shortages are being driven by rising property taxes and insurance premiums nationwide. And we didn't talk about flood insurance too much, but that's also something that's rising across the country for especially certain states. We don't see it much in Iowa, but it does exist. And they show up as a jump in your monthly payment once a year, and you have real options for handling them. You're not stuck just accepting whatever that notice says. So reach out to us. Let's help you walk through that and see if there's anything we can do to help you out. We hope you enjoyed the conversation today and found it valuable. Be sure to follow us on all social media platforms and subscribe to the episode. And remember, stay curious. We'll see you next week on The Lofty Lender.